Reserve Bank always says that it makes its decisions based on all the economic data, both local and international, at its disposal. And it absolutely denies that it just follows the lead of big central banks like the Fed. Dr. Azar Jammine says a Fed interest rate move is essentially one that sets the global tone.
As other countries increase interest rates, so that puts downward pressure on the rand, because unless we commensurately increase our interest rates, the advantage of taking positions to deposit money or in rands or to buy rand bonds is diminished, and that compels the Reserve Bank to have to keep pace with interest rates in other countries.
The local currency has been under serious downward pressure, trading as low as 18.40 against the dollar in recent times. Jammine says the general rise in global interest rates has made emerging markets like South Africa less attractive to investors, but also notes issues that are peculiar to South Africa as being responsible for the depreciated currency.
The first, undoubtedly, is load shedding. With load shedding, you have lower economic growth. With lower economic growth, tax revenues suffer, and as a consequence, the ability of the government to fund its expenditure is impaired, implying the potential for an increase in our public debt beyond what was originally hoped for, and that is being penalized by international investors who are calling for a greater attraction to invest in our bonds and other instruments, and that means selling out the rand and to a level where it becomes cheap enough to want to buy these instruments.
Local market players expect the Reserve Bank to raise interest rates on the 25th of May.
It's very important for us to maintain the interest rate differentials between the USD and the local currency, because if we don't, then the rand might do worse than the way it is doing now. So we expect the Reserve Bank back home here to also increase interest rates by at least 25 basis points. And anyway, our inflation is still at elevated levels.
The European Central Bank also raised interest rates by 25 basis points. Given the inevitability of a further rate hike, the hope for South Africans who are in debt may be that the SARB slows its rate hike pace from 50 basis points at its last meeting in March to 25 basis points this month. Nampumelelo Siziba, SABC News, Johannesburg.